Hey everyone, today let's dive into a very intriguing economic situation unfolding between two neighboring giants, Canada and the United States. How exactly are differing interest rate policies shaping their economies? Let's find out. Interest rates, the tool used by central banks to control monetary policy, are on a diverging path in Canada and the US, setting the stage for some potentially big impacts. While the U.S. Federal Reserve has been on a rate-raising spree, the Bank of Canada recently opted for a rate cut. This difference could spell a lot of change for the Canadian dollar, and more broadly for consumers and homeowners in both countries. Why does this matter? Well, for starters, when the U.S. hikes rates and Canada does not, it typically leads to a stronger US dollar compared to the Canadian dollar. This can make US imports more expensive for Canadians, potentially driving up inflation. And inflation, as we know, affects everything from the price of groceries to the cost of vacations. On the flip side, a stronger US dollar can make Canadian exports cheaper and more attractive abroad, which could be good news for Canadian businesses selling outside the country. However, it's not all rosy. Higher US interest rates mean Canadians borrowing in US dollars will face higher costs. And let's not forget the homeowners. Canadians generally have more sensitivity to interest rate changes compared to Americans due to the structure of their mortgage market. This means a small interest rate hike can have a big impact on Canadian homeowners. The U.S. economy, meanwhile, continues to show resilience. Despite higher interest rates, which often cool down economic activities by making borrowing more expensive, the U.S. is still going strong. This resilience can be attributed to a robust job market and strong consumer spending. But what does all this mean for the future? According to experts like Alan Small, a senior investment advisor, we could see the Canadian dollar experiencing some volatility as these monetary policies continue to diverge. And with the Bank of Canada taking its interest rate decisions one meeting at a time, as stated by Governor Macklem, the uncertainty only adds to the suspense. In conclusion, while the U.S. seems to be powering through with its strong economic fundamentals, Canada faces a tricky balancing act. Managing inflation, exchange rates, and economic growth amid differing monetary policies will be a challenge. So, whether you're an investor, a homeowner, or just someone interested in the economic pulse of these two countries, keeping an eye on these developments will be crucial. That's all for today's deep dive. If you found this informative, don't forget to like, share, and subscribe for more insights. See you next time.